Hi, it's Lee and welcome to the Tesla Economist. I know it's more difficult to focus on Tesla right now compared to what's happening in the overall market, and there may be people out there much more concerned about how they can afford to buy groceries next week rather than what Tesla's stock price will be doing. But this is not a channel about how to budget for your grocery shopping, so I talk about what's happening with Tesla. I try to offer perspectives for you to objectively decide for yourself on the appropriate level of conviction for your Tesla investment. However, this video will focus more so on the macros that are against Tesla right now. So far, all the Fed have done to the stock is suppress Tesla's PE ratio. Tesla seem to still be selling every vehicle they make. Even after all these price increases, Tesla's growth still seems to be on track, except for some issues we're facing with 4680 sales. But China has pulled its weight anyway and ramped up big time, something that the stock price hasn't really added in yet. Well, maybe slightly. It's hard to tell right now. It felt like it was all coming together, then Jerome Powell had to open his mouth. If you owned a business though, and you saw growth continually growing quarter over quarter, you managed to increase your production dramatically and still had enough demand for the additional supply, then you'd likely be pretty happy. On top of that, imagine if your revenue and profits were increasing at an even faster rate than that again. Would you really care what some random crazy person outside your company kept yelling out a price that he'd buy your company for, especially when you had really big plans for the rest of this business over the next decade and longer? In fact, a potential of perhaps making 10 times as much profit as today. That's got to be quite exciting. Then what about the lack of stress from not having any massive debts, yet selling products that have huge margins, and there being no one else in the industry capable of making a product close to what you can for anywhere near as low a cost as you? Oh, and in an industry that is growing exponentially with continual technological improvements, further improving efficiencies, lowering costs, and improving demand. Well, that in reality is the scenario we are in as Tesla investors. We're able to buy into a slice of this dream scenario. But can Tesla's stock price continue to rise in such a tough market? Is there too much negativity in the market? Have investors' confidence been beaten down? And it's too hard to look into the future couple of years of a growth company like Tesla, let alone the next 10 years. Yes, Tesla's growth potential for the rest of the decade is truly unbelievable, but it shouldn't be all that's required to move the stock. Tesla's growth is happening at rapid rates, quarter over quarter. It's not taking years to achieve. Of course, this would be further accelerated by 4680s. In other words, we continue to see rapid growth in production and accompanied by even faster growth in profits, and the finances are the quantifiable element. Perhaps the market is even pricing in profits to drop for Tesla, as the auto industry is cyclical and suffers during down markets. Tesla's growth and profits will definitely beat market expectations. We now have a rough idea of what Shanghai is capable of in production. On top of that, if Berlin starts to ramp up seriously next year, that's going to be a massive boost too. Then there is the hope for Texas. Then more Shanghai expansion. Okay, sure, this isn't going to be all happening next quarter, but it should be feeding into each quarter and expanding with continual growth, quarter over quarter, until we get to about the end of next year and potentially find ourselves at a run rate of around 3 million vehicles a year, or possibly higher if things go really well. The market has not valued this level of growth in. I think they're not expecting this level of deliveries until perhaps around 2025, with a lower ASP than Tesla have today. But when you factor in the Cybertruck and 4680 Model Ys, then ASPs will actually be higher than today, and the margins coming out of Texas will be the highest too. Then we've also calculated how much a run rate like that would affect economies of scale, shrinking OPEX per vehicle significantly, just about doubling operating margin by that stage, and not far off the same for net profit margin. Now, in my opinion, the street is not factoring in these higher sales, higher ASPs, higher gross margins, net profits, and EPS. As Tesla is a growth stock, it's already priced in to expect an average of 15 to 20% growth in the stock anyway, which is about the amount that many investors discount back the future stock price. But when the end of 2023 profits are higher than the market is expecting for 2025, then I would expect them to make some adjustments to the stock price accordingly. Right now, the markets have really been hit by what the governments are doing to correct the issues they've caused. At the time I made this video, the S&P is only 8% above its pre-COVID high, and the Nasdaq 11% before all this money printing. Does that sound right to you? Of course, Tesla's up about 250% because we rock, but that's not what I'm referring to. They may have been overcorrected, Yet we still have doom and gloom out there, and people starting to comment again that Tesla will go to $100. And even if there is more doom and gloom, and the markets end up dropping to below where they even were pre-COVID, then can Tesla swim faster than the tide, is the question. If there is more market suppression, i.e. PE ratios dropping, can Tesla's earnings increase more to overcome the actual suppression in the stock price? So really, how much lower can the stock go? All other growth stocks have been hit terribly. Somehow, Tesla is only down about 30% from the all-time high. Even the almighty Google is down more than that. Another perspective is to understand what money actually is. We're valuing things in dollars, like dollars actually mean something. But in reality, they are also completely relative. I mean, look around. The prices of other assets have been dropping, whilst Tesla has been holding much better. It may only be worth $280 a share or so now, but that $280 is worth more than it was 6 months ago, due to the deflation that's been happening as well, as we're seeing commodity prices dropping and real estate. Okay, sure, we have high energy prices to deal with, but eventually we hope they should drop too and provide much needed alleviation. On the flip side, Tesla also has an energy business that finally has enough sales to actually start ramping to some decent levels, accompanied with a new megapack manufacturing facility. So all these issues thus make Tesla's energy business more valuable. Remember, we often hear about people talking about Tesla being a diversified company or more than just a car company, but the financials say differently. All profits come from cars, but ramping up energy will actually change this. Bear in mind, this market suppression is temporary, just to cool things down, and hopefully the economy will return and the PE ratios should hopefully spring back to a more normal range. This could be the breakout we're hoping when things are not being so compressed, and perhaps it will all happen at once. The perfect storm, inflation getting back to normal rates, and Tesla's 4680s hitting high volume production, and we eventually break this $1,000 stock price. On top of that, we have all the other Tesla events that we can hope will move the stock, that always, and I really think just about always, fail to do so. AI Day will likely go over the market's head, but the one that we may have the most hope for is the S&P investment grade rating. It makes sense that if the big money can invest in Tesla, then it will reduce the liquidity of the stock, and most of us retail investors aren't going to sell until we see that stock price grow significantly. So what I'm saying here is that even if the markets get hit worse, then I would hope that Tesla's stock price can still keep recovering. And even if it's going against the market, Tesla may have to reduce some of their prices in order to restore demand, but they have the margins necessary to do that. In addition to that, we're seeing various commodity prices dropping too, and if things get worse, then these prices will come down further as well, thus also reducing Tesla's costs and restoring margins somewhat again. Tesla's margin buffer is a big deal for the company and should be the ultimate tool to weather through the storm. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.